video help for exercise 4.2. This is on page 105 and 106 in your textbook. And looking at the bottom of page 105, notice the accounts that are going to be used. They're numbered for us. Those numbers don't matter for this portion of the problem, but they matter when we do problem or exercise 4.3 because we will be posting into specific accounts. Now, what we're doing in the General Journal is a brand new topic for us, and I want to point out that the General Journal is like a diary. It's like the diary of your business, what happened during each day. So back in the day before computers, transactions would happen even before cash registers, because cash registers do the entries for a business. Before cash registers, the bookkeeper had to record what transactions took place during the day. The General Journal was the journal of original entry of each transaction. So this is, maybe not how we do business anymore, but it's where every transaction starts, and it's how you figure out where which accounts every transaction is going to, which ones will be affected. All right, so with a General Journal, always make sure you put a page number on them, and we will almost always start with page 1. Sometimes we will start with a different page, but that's pretty normal. And when you open up the General Journal to begin with, you want to put the year and the month in which you are working, and this is September. And then the date of the number of the day will be in the smaller box here in the columns. We will put debits in the first line, we'll put credits in the second line, and we will make a description as best we can of the transaction that took place, so that if we needed to backtrack and find out what happened with a certain transaction, we would easily be able to see which accounts were credited and debited and what happened, what took place. Okay, so the bottom of page 105 shows the accounts that are going to be used. And on page 106, we're going to walk through each transaction one at a time, putting them into the General Journal. Okay, so our first transaction says on September 1st, so we'll put a 1 in there. Zach Mason invested $30,000 in cash to start the firm. So cash would be our credit. We're getting cash. Debit. Cash will be our debit. Always put the debits first. There's nothing that we put in the post-reference column yet. That will come in the next exercise. We are adding the $30,000. And then the second line would be the Zach Mason capital. And you do want to indent that just a little bit. And that's where we're adding the 30,000. Oops. And then the third line is a description of the transaction, and we are beginning investment. There's no exact wording for your descriptions. When you're writing your description, you just want to think, would somebody understand this if they looked at it in 3 months? That's a great way to think about it. Okay, skip a line, and our next transaction happens on the 4th of September. We just need to put a 4 in there where the September we just assume. Okay, and the transaction says we purchased office equipment for $3,250 on credit from Den Inc., received an invoice payable in 30 days. So in taking that transaction apart, we purchased office equipment. Office equipment is an asset, and we added to our assets. So that will be our debit. So, and I believe our account name is just equipment if you look on page 105. So equipment, and that equipment was $3,250. And we did not pay cash for that. We promised to pay Zen Inc. In 30 days. So that would be accounts payable. And a description there would be purchased equipment on credit from Den Inc. The invoice number is super important because that's our trail of information that if we had to look through and find what invoice was there, we would need that. Actually, invoice 9823, payable in 30 days. Okay, that's a pretty good description. The next transaction is on the 16th. We read it. Purchased an automobile that will be used to visit clients. Issued a check for $15,000 in full payment. Okay, so we received a car. So that is our asset, and assets increase on the debit side. So the account is called automobile. And that was $15,000. And we paid cash for it. Indent to cash. Oops. All right, and just a small notation. Paid cash for auto. Check number, oh, we can abbreviate that. Check number 1001. First check. Okay, for the transaction on the 20th, we purchased supplies for $260 paid with a check. So we'll get our date in there. We increased our asset called supplies. It was $260. And we paid cash for that. And our notation, paid cash for supplies. Check number 1002. Okay, skip a line. Now we're on the 23rd. This one's a little different. We returned damaged supplies for a cash refund of $85. So it looks like something that we bought just on the 20th was ruined, and we took it back and they gave us cash back. So we're increasing our cash by $85. And we're decreasing supplies. And a notation. Returned damaged supplies for a cash refund. They didn't tell us who, but that's okay. All right. On the 30th, the first 30th, notice there's a whole bunch of things that happened on that day. That's common that a lot of things happen on the last day of the month. So on the 30th, we issued a check for $2,100 to Den Inc. as a payment on account for invoice 9823. So we know cash left us, so that'll be the credit. Now the debit is going to be accounts payable because we are reducing our liability. So accounts payable, That's what the people we owe. Normally that has a balance on the credit side, but we are reducing it because we're paying. So $2,100 is coming out of accounts payable, and we are paying cash to do that. And the notation is we paid Dan Inc. on account for invoice number 9823, check number 1003. Okay. Now I think we're out of room on this form, and your guys' forms might not be exactly the same length as mine, but I have to move to the next form because that's the bottom of my form. So I'm going to go on to another page here, and I'm going to open it up with putting the page number on it. And starting the top line with the year and September and 30th is the date that we're on here. And the transaction we're working on here is the withdraw of $1,500 cash for personal expenses. So the Zach Mason drawing is the account we'll use to take money out, and we're taking out $1,500. Reducing our cash. Oops, I need to indent that. And a notation. Owner withdrew cash for personal use. So something to talk about here is, let's say that Zach has his own car and he has his own car payment. So it's not the car that he uses for his business to visit clients. He has a normal car payment on his personal vehicle. His business cannot write a check for his car payment. That's like mixing up personal and business, so you can't do that. But it is fine for the business to give Zach cash, then he deposits it in his own account, and then he can pay his car payment out of his own account. That is important. That's an important part of bookkeeping, that you keep things straight. Okay? Just a little lecture. Okay, next, on the 30th also, issued check 1004 for $3,500 to pay rent for October. So that would be rent expense. And it is $3,500. And cash. And a notation. Check number 1004 for October rent. Okay, we had a discussion in class about that being prepaid rent or rent expense. And I don't know the answer yet. I'm going to ask the accounting principles teacher if there's a rule on how early you pay your rent, whether it's prepaid rent or if it is just a rent expense. In this case, we're paying on the end of September, but October starts tomorrow. It seems legit that it's a rent expense, but I'm not 100% sure on that. So it in fact could be prepaid rent. Your authors will make it really clear when it's supposed to be prepaid rent, because they'll say, Google, hey Google, stop. Sorry about that, had a timer. Your authors will make it clear when it's supposed to be prepaid rent. They'll say, paid 6 months rent in advance, and then it's clear that it's prepaid rent. So stay tuned. I'll find out more about how soon you can pay a month's rent and have it be still an expense instead of a prepaid. Okay, next one, perform services for $7,325 in cash. It's on the 30th. That is cash, 7,325, and that was our revenue account because it was performed services. So that's fees income, 7,325, and a notation, performed service for cash. And last transaction for the month, paid $220 for the monthly telephone bill. So we have a telephone expense. And cash is our credit. And the notation, check number 1005, telephone bill. Okay, so now we have finished with all of the transactions for September for the Mason company, and the next step that we are going to do is we're going to post all of these general journal items into individual ledgers. So you will notice that as we went through the general journaling, we did not do anything in this post reference column. That is to be used after we post each item in their individual ledger accounts. We then come back after we post, say, this line, we come back and we put an account number in here, which is sort of like a check mark saying, okay, I posted that one, and it helps you see where you are in the list. All right, I'm going to follow up with a separate video on posting these to the ledger, so check back.